Hello, Elizabeth Ellis here with Tradeflix Incorporated, looking at Euro USD, and a little over 30 minutes ago we broke out, making higher highs on this chart. I do see that we do have potential to go back to the sell-off later today, simply because the 4-hour is sort of indicating that to me. So for now, though, we are positive trending. You can see the momentum here, just like a wave. We're making higher highs on the chart and the indicator. So basically, I'm just simply going to look for a pullback. Anytime we see %K, which is this blue line, come underneath 0, this dashed black line, and when %D is sitting above it, which it's sitting above it now, anytime that we reject these lower prices, like you can see this green candle popping up, you can enter right there. Sometimes, though, I want to be a little bit more careful to trade these type of pullbacks, because sometimes it will appear to be continuing and it can still end up reversing. It's always better if you're going to buy. It's always better to buy it when it's breaking out off the bottom, like here. It was down here at the bottom and then it started to go up. But we're still at the beginning, for the most part, we're still at the beginning part of this trend, simply because when I look at these higher time frames, they're all pointed up. So excuse me. So we want to use caution in these areas, and as you gain experience, you'll be able to better, identify which of those are going to be false moves and which of those are going to be reliable moves. But the most reliable moves are going to come from the outer edges of the indicator. Those are going to give you those moves that are more like the legs of the chart, like this here. You can see this is kind of like a big leg, so price won't be coming back to this area for a while. So now we have the indicator curving up quite a bit. This is still a trade, a move that's not going to be 100% reliable like some of these other moves are. Like this first pullback is going to be the most reliable one, just depending on the way that it pulls back and the way the other time frames are indicating that the market's wanting to move. So with the second one, it really just depends, because sometimes the second one is more reliable, not to create confusion here, but sometimes the second one is more reliable, sometimes the first one is. So right now, see, it appeared to be wanting to go up, but we are sloping down. So we want to be extra careful to, look for a cross, look for this %D to cross. That's going to be the most reliable way to enter it. And then also, so we see it crossed, and then we also see the higher time frame saying, yes, we're still heading higher. So when we see that, we can be fairly confident to take that trade. Now, more confidence, more reliability can come from letting price pull back and retest, and then reverse from this lower level of the indicator. So you can see that as soon as this %K started to inflect, the blue line, as soon as it started to have this little angle on the indicator, this very first green candle, we're at the moving average and we're basically rejecting lower prices. That would have been the best entry if the breakout was missed. That move should be good for an hour. So the close of this candle, if you wanted to put a trend line here or just mark this level, then for the next hour, there's a really good chance that we will see 100% of the next 4 trades close above that level. So I'm going to mark it here. It's with this blue, and I could make it darker, or I'll just thicken this line up a little bit. So we can kind of see that, you know, something that's supposed to happen, or something that would typically happen, isn't necessarily happening in this situation. The indicators come down. It's the %D is below the 50% mark, the 0 line, and the price hasn't really dropped. I mean, it's going sideways here. There's a bit of some congestion in this area, so we have, you know, the bulls and the bears are, you know, kind of head to head, you know, seeing who's going to have the most momentum here. And so what we want to do is we want to wait, we want to watch it, and we want to see %D, the blue line, excuse me, %K, the blue line, cross %D. Okay, we want to see all this happen at the right, you know, space of the indicator, with the rest of these time frames saying continue to the upside. If they're saying continue to the upside, then we want to take that trade. So right now, the 5-minute chart is in what can be considered an oversold area, but it doesn't actually indicate that it is actually oversold or overbought, excuse me, and it doesn't actually indicate that it's going to sell off. It's going to indicate that when the other time frames are also agreeing that it's time for a reversal. So it's a little bit more risky now that the blue line on the 5-minute chart, the %K line, is so extended at this point. It's so far into this upper region. It is, what this is basically saying is that it is more likely to pull back to cross the green line %D and have a either temporary correction, minor pullback before continuation. It can pull back however deep it wants. You know, it can pull back however deep it wants. The point is that if the other time frames higher than the 5-minute time frame are saying buy when this pulls back, and we look at the price pattern on the 5-minute chart, we can see if it's making lower lows, if it's making if it's sort of having this sideways momentum on the chart. And if it is, then we can see that price is not moving how it would typically move if it were truly breaking out. So we would wait for the 5-minute to possibly reject lower prices, making that a pullback, and then we would wait, we would watch for that to, you know, continue to the upside. So right now it's about a little less than a quarter to the hour. We're pretty much at this top part of the move, so we want to watch and see if it's going to come back deeper into a deeper sell-off, or if it's going to break even higher from here. So I'm just looking at it, and I'm just looking at it. I'm looking for a good entry, like where it crossed just now, or a minute ago, was a tempting place to take a trade. Very likely that had we bought it, let's see here, say here on this red candle, that this trade will close above that price there. So I'm still watching it, but I may be looking. I may have a better indicator to enter the market if I wait until the second one. See, because of how the indicator is sort of zigzagged right here, you know, we kind of, when it first came up, we kind of anticipated that it was going to cross and price was going to go higher, but then it rejected and it came back and it actually did cross from this lower region of the indicator. But we want to be a little bit cautious here to watch these higher time frames, because they've already sort of made that move to the upside. Now the 30 still has room to head higher. The 1 hour still has room to head higher. So there's potential for price to continue higher. But we want to watch it and see how it's behaving at this level. You know, is it showing strength? Is it showing weakness? Is it a typical pattern that's reliable, or is it a less reliable pattern? And go from there. So I'm just gonna watch this for a little bit and see how this price is gonna react. You know what I mean? Like, is price gonna come in to the moving average, for example, looking at this 5-minute chart, or is it actually really going to just continue higher from here? Even on the 15-minute, we could see it come back into the moving average. We do have a signal on the 15 saying sell. Once this is completed, the momentum, and it actually is ready to reverse. But let me look at this 5-minute a little bit closer. So this one's saying sell. It's now crossed. It is saying sell, but at the same time, this is a bullish pattern. So even if we have a sell-off here, it could just be temporary. So we could see some sideways activity, because the first 3 charts are sort of saying we're going to drop a little bit, but these higher charts are saying the momentum, there's a little bit more momentum to the upside. So if we drop, we may not drop that much, you know. So the entry price would be even more important to catch at the right time, you know. In other words, the timing of the entry into the market at this point would be more critical to the success of a trade or not. I really wouldn't want to necessarily sell this right now, because the slope on the 15-minute chart is up. So even if the 15-minute comes in towards %D, it's coming into support. So we know that it's going to stop at support, or there's going to be a little bit of resistance there. We may see a little bit of weakness to the downside. So I want to have a little bit more confirmation that of the direction of the market. So I'll wait for a retest. It's more critical to get that retest to wait for those higher prices before entering the market. Like I said a minute ago, we want to wait for, it's critical to time the entry, especially with the higher time frames pointing in the direction that they're pointing. And hopefully the audio on this is decent, at least. I've noticed that it sounds like there's a little bit of noise and just kind of not 100% crystal clear. I may have damaged my laptop a few months ago. So anyways, let's see here. Sorry about that noise that you may hear in the background. I'll just try to mute this when I'm not explaining this market. But you can also see that price did come back into the moving average on this 5-minute chart. A minute ago we were up here. We were kind of gapped away from that average. There was plenty of space for it to come down. Now there's a little bit of green. We're at the moving average, so this average is acting as a support, and we may see price come off of that. Now we could also see it come just below it. If you look at the 15, we have some room to the downside, and we are inflecting. Here we are flat, and this chart is saying get ready to sell. This could be an evening star pattern. Now with the indicator as low as it is on this chart, price looking like it's dropping here, I still would not buy this or sell this. I wouldn't sell it because there's no room. Like, there is room on the higher time frame charts, but I know this is a temporary move to the downside, possibly at least on the 5-minute chart. It's just temporary. Okay, so the 1 minute chart is just crossed at a lower level. It's more likely to come back into support though. The 15 is curving over, and so I'm looking to see if there's going to be a little bit of weakness on the 30-minute chart. If there is some weakness on the 30-minute chart and the 15 is still saying sell, then along with this 5-minute pointed down, if that were to continue, if we got some weakness, if we had some weakness on the 1-minute chart, then it just now backed up a little bit. And also we have this this bullish candle that actually closed as a doji, a red doji at that. So there's potential for this to go either way, because like I said, you know, the 5-minute is saying temporarily sell, buy, rejecting at the average, and the 15 is also rejecting at the average, even though it's saying sell, potentially saying sell. If I look at this failure to the downside here, that could have been enough right there to say this is support. We have this long green bullish candle with this long wick, so we could see that the price will not drop below the 12,458 level, which is 12,458. It's about right here on the 1-minute chart. It's going to be about right here. Yeah, about right here in this level. And you can see this red candle came all the way down to that level. The low was 12,460. And price is up above that now for the past 5 minutes. So there's a little bit of confusion in the market. We're seeing a little bit of sideways, but more than likely the best entry would be a buy. But it's still not confirmed. It's not 100% confirmed because we are at the top of this move, rolling over a little bit. We can hold this level and break, you know, higher. So So I'm watching the 5-minute chart because I can see that we're still hovering around that average. It appears at a level of support, and the 5-minute is saying, get ready to buy is what that one's telling me. But I'm also going to keep my eye on this 15, because if that 15 starts to head lower, we could see that 30-minute chart weaken, and price could continue to the downside from there. So I've just been watching it here just a little bit. I almost traded this. I was tempted to trade this area right here. I was looking at this as if it were a failure to the downside. The 5-minute was hooked up. This is at the 19, and the 15 was showing weakness, weakness to the downside. In addition to that, the 30 and the 1 hour were both looking stronger to the upside. So with the 15 sloping up above zero, even outside of the neutral zone, we have upside momentum on that 15, even though technically the pattern is saying sell. So as you can see, we have like a back and forth going on here, meaning that it's even more important. Like, it's always important, but it's even more important right now to be even more choosy about which trades to take. So I saw this pop up and I was thinking, okay, I'm not sure about trading this because it's inside of the neutral zone. It's in between these two red lines. That means that it can go either way. The moves inside this area are going to be more, they're going to be less reliable depending on how the market's moving. If it's sideways, flat, choppy in that area, then it is less likely, it is less reliable. And so I just didn't take the chance. I didn't take the chance, and you know, I could see that the 15 was coming off of the average. This is our first green candle on the 15 chart, on the 15-minute chart. So I could see that, you know, we could continue higher from here. But with so much back and forth in here, I'd much rather take a more reliable signal on the 1-minute chart than to take a trade here. Basically trading an opinion is what it would be, because it's going to be a less reliable signal, which means that it's going to have less reliability. In other words, there are other trades, there are other signals, other moves in the market on the chart that are going to give me a higher probability. See, and when I hesitated on this green candle, I thought to enter it on this candle, but it hadn't closed way up here yet. It was still down here. So that would have lost if I would have traded this one. If I would have got in late, I would have had to, like I said, you know, with the market moving back and forth, it's very, you know, it's critical to really time the entries to pinpoint, you know, almost exactly the right entry at this point with the market moving the way it is now. If the market was trending, it'd be a lot easier to just kind of catch the trend, just kind of get in, but you still want to get in at the right time, because this is, you know, binary, not Forex. And it doesn't really matter if it's binary or Forex, because even with Forex, you want to time your trades right. You still want to time your trades right. So binary options is a good way to practice doing that. And then what's happening here on this chart is what I was thinking could happen. Because I see that on the indicator, I saw how we had come up and we were making a higher high on the indicator, right? If you look at the green line, the tops, once this green line passed this top right here, I could see, okay, we have a higher high on the indicator. So I looked back at the pattern on the chart, and I was thinking, okay, this is higher, this is lower, this is higher, this is higher. And I could see with the higher time frame indicating a sell, there was a chance for it to come into support, and that's what I'm seeing happen right now. Now the 5-minute is into the neutral zone. So the 5-minute is into the neutral zone, and it's hooked down. So it's, excuse me, so it's less, it's in that place where it's less reliable. Now we have a hammer at the what could be the bottom of the sell-off. However, when I look at the pattern on the 5-minute chart, it doesn't look like the bottom. knowing also that the higher time frame, one chart higher than the 5-minute, is also saying sell. If this crosses, we're going to move to the downside. We have weakness on the 30-minute, and the 1 hour is leaning, giving it permission. So this was probably going to be the better entry to trade a sell, but I just recently heard that you're going to make money buying, not selling. Of course, that applies in a bull market, and with the euro dollar market, the pattern is saying sell, even on the higher time frames. So I know that the overall, the general trend is going to sell off. Like, this is going to sell off more on this 1 hour time frame. We're going to see price drop. I don't know how much. I haven't looked at how much. But right now, we're going to come up. Possibly we can come up some more before we break to the downside. But right now, we know that I know that we're coming down. So now we're coming down, but that doesn't mean we trade everything to the downside. We're going to look at what's going on right now, right? The 1, 5, and 15, they're going to kind of tell us what's going on right now. The 31 and 4 are going to kind of tell us what's going to happen next. And the successful trader, this is quoted, the successful trader does not base moves on what supposedly will happen, but instead reacts to what does. So it's going to continue to sell off. Don't worry, no problem. We're going to get another entry into it. We just wanted to catch what this thing was doing, because one was saying one way, the other one was saying another way. When that happens, we tend to see the market moving sideways or chopping, and those are going to be the less reliable trades. So now that everything is pointing clear to the downside, it looks like we may come into a trend to the downside. However, we may still see some choppiness, because the 1 hour percent K, the blue line, even though it's flat and it's inflecting here, this is not going to be a reliable pattern necessarily. It's not going to be reliable. Now the 4 hour is holding it down, but the 4 hour is also showing a little bit of weakness. So I'm seeing the 1 hour chart is sort of kind of holding this level here. It's sort of like at a support. If I extend this, you can even see right now where the price is, it's at the previous high on this chart. So we have some congestion here. We have some back and forth in the market. Determine who will prevail. You know, will it be the bulls? Will it be the bears? I'm just looking to simply follow the money, basically. You know, who's putting money in the market? Is it going to be the bears, the sellers, or is it the bulls, the buyers? And when I see the patterns all saying the same thing pretty much, you know, lining up either in favor of the bears or in favor of the bulls, then I want to catch that. I want to get in with them, even if I have to wait a few extra minutes, 15 extra minutes, 20 extra minutes to catch a good pullback or a good pop-up. That's going to give me that higher probability trade. Of course, you know, there were still opportunities to get into this market. Like, I've marked this first candle here, and every single one of these trades is closing below that level. This was like pretty much where we had this confusion here, where we were talking about that second pullback being sometimes reliable, sometimes more reliable, sometimes less reliable. In this case, it proved to be less reliable because the 5-minute had already crossed and it was showing momentum to the downside. The 15-minute had weakened as well, but there was still a little bit of confusion about which way the market wanted to go, because the 30 was pointed up and it was looking stronger to the upside, and the 1 hour was also doing the same thing, pointing up, looking a little bit stronger to the upside. I said downside, but I meant upside. And so we had all of this. We come back up here to this extreme level, outer edge of the indicator, and boom, this was a good entry into the down. But like I said, it's okay. We don't have to have FOMO, fear of missing out. We don't have to feel like, oh man, I've been waiting all this time, and now all of a sudden, here we go, the market's moving, and I can get in. Doesn't matter. Doesn't matter at all, because if it's gonna move, it's gonna keep moving, right? If it's gonna keep moving, and those are typically the type of moves that we want to be taking, the type that are gonna continue on, the type that are gonna trend. Um, you know, so what that means is that we'll catch a pop-up. We'll catch a pop-up. As long as everything else is still saying sell, then we'll enter it on the pop-up. So when it retests, that'll be our opportunity. So what I'm going to do is I'm going to go ahead and I'm going to walk away from this for an hour. I'm going to relax my mind and whatnot. And the reason I say that is because sometimes what will happen is if I've been looking at the chart for an extended period of time, I will it can kind of have an effect on my judgment. And so sometimes it's good to just kind of back off and step away. I have something to do, so I'm going to take this time, and like I said, in about an hour I will check this chart. I want to see the momentum stronger. I can see that the market wants to sell off. It actually looks it actually looks pretty strong right here at this point. It looks pretty strong right here at this point, but I think I'd rather trade us instead of, like, for example, where we just crossed on the 1 minute. I think I'd rather see a cross on the 5 minute. So I'll give this 5 minute a little bit of time to get more clear, because more than likely it's going to pop up again. I am seeing that indicated on the pattern. It's already in the oversold area, so it's more likely. I mean, we have more room to the upside, so it's more likely to come back to the upside. So when it comes to the upside, if these other charts are looking even stronger to the downside, then that would be the best time to take a trade. And I have no problem waiting for it, because it's just, in my opinion, it's much better to be a little bit more, to take the trades that are going to be more reliable than to be anti about wanting to get into the market. I'm not trying to get into a fight in this. I'm not trying to go back and forth with these people. So, so anyway, like I said, in an hour I will be back. I may make another video today. But anyways, for now, I'm going to get off of here, and hopefully you've learned something from what I've said, and I will see you in the next video.